All right, guys, looks like we are live. Welcome back to Roxham TV and also welcome back to Gem Crypto, whichever platform you're watching. So happy Wednesday. I'm in an extremely good mood today, not because Bitcoin pumped a little, like we did like a 1% pump compared to yesterday live stream. So of course, we're going to look into the chart, where Bitcoin is going, do a little chart analysis and news analysis. But also Tesla is doing extremely well. Even Elon Musk himself is tweeting on Twitter. So we're gonna dive deeper into what are the catalysts to pump up Tesla price and why I have been so long-term bullish on Tesla. If you have been watching my content on Gem Crypto on my own YouTube channel, then you probably know that I have been talking about Tesla for like 2 or 3 years, and I love where the vision, like Elon Musk's vision, and how everything about Twitter is aligned with our future. So we're going to dive into that. We're going to look at the chart of Bitcoin. We're going to look at the news. And also some people are saying that, okay, since Bitcoin isn't doing much in the basically the past week, is the top already in? So are we already at the cycle top? So I'm going to dive deeper. I'm going to answer all the questions. But first of all, if you guys are watching this live, make sure you hit the like on Roxham TV, and also make sure you subscribe to Roxham and my own YouTube channel, Gem Crypto. Without further ado, let's look at the chart right now. So Bitcoin, we did like a tiny, like a 1% pump compared to our yesterday's live stream. I mean, which is pretty good, right? And if you look at this like general trend, we are on a rally. It doesn't take a genius to figure out that we are in a rally. The reason why Bitcoin is doing what it did like generally is not bad, right? So we bounced back from the low of like 107 to now 117. So a 9% pump, really nice, really generous. Yeah, so why is this? Why are we pumping? Basically, look at this, like the ETF inflow. Bitcoin ETF is bringing like 5 consecutive days of multi-billion dollars of inflow. So it's really reflecting on the Bitcoin's price chart, and especially from the past week, we have been on like a really good rally. So yeah, look at that, the past 7 days, 5%. And when I like looking at the ETF because most of that is from institutional money. And when institutions get into Bitcoin, usually it's a big buy. So this is one of the important metrics to look at when we do Bitcoin BTC analysis. So on the daily, things are looking good. But again, it all depends on the Fed decision. So FOMC meeting, we're going to have the result tomorrow. So it's happening between 17th to 18th. And usually the result will be out on 18th of September at 2 p.m. Eastern time. So for me, that means it will be on 19th of September, 2 a.m. Hong Kong time. So I'm going to watch the chart very closely. At the moment, I would say we have already priced in like 96% of people are speculating that we will get at least 25 basis point cut. Only 3.9% of people think that we'll get 50 basis point cut. I personally, I'm in favor to the 50 basis point cut, because even though if the Fed does cut rate by 0.5%, that will still not be enough. Like we still need to catch up to the 2-year Treasury yield. So that's why I say like a 0.5% rate cut is justifiable. But again, all eyes on the Fed. I will say 25 basis points have priced in. If that were to happen, then it might trigger like a slight dip, or like at best it will be neutral. We are like on the chart, we're seeing like 119 as like a critical level I'm watching. The reason why I put like 119 here is that, okay, they're like so much, okay, we're on the daily, but there weren't many daily candles actually close above and close about like 119 for like 2 or 3 daily candles. So if we were, okay, let's say we do like a 50 basis point cut, or I don't know, like even a 25 basis point cut, maybe some of them hasn't priced in, and that still trigger a tiny rally. I do expect like 119, there will be like some people taking profit off the table. So 119 is a level I'm eyeing very closely. And I really wish to see Bitcoin on the daily chart could close above that 119 and actually close with like at least 2 daily candles above 119. That is to show me bullish sign on the short term. At the very least, I'm talking about short term. Let's also look at the long term, because I've seen it on Twitter. People are saying that, okay, Bitcoin isn't doing much. It's mostly flat. Like if you look at here, the past few days, the past week is mostly flat. So people were concerned, oh, is it the top is in again? Like I get these questions so often. And to see and predict whether the top is actually in, one indicator that I like to use is the 200-week moving average. So right now, 200-week moving average is at $53,000, so 53K. So how you can read this, like why there's so many lines, Jamie. So let me go ahead and remove the moving average, because we know that its starting point would be 53K. So usually when from the 200-week moving average, we pump up 50%, like this region is classified as cheap. Here, like between 79 to 107 is like neutral, is cheap as well. Between 107 to 113, that will bring us like 150% away from the 200-week moving average. So things like in this region is a little expensive, but we are nowhere close to the top. And if we go ahead and pump another like 200% from the 200-week moving average, then like this region, I would say is a little frothy. And at the moment, we are just at 116 in the, like, I would say the mid-level of slightly expensive, but there's still so much room to grow. So there will be like another 37% to get to the really expensive level. So all I'm saying is that it looks like the top is nowhere close. And this is just like one metrics I like to pull. Of course, again, I'll stress this again. It all depends on what the Fed is going to do on 18th of September. So in like a day or two, in like 2 days time. So if we only get 25 basis point, I lean forward to a buy the rumor, sell the news event. Hopefully we get 50 basis point. But yeah, there are 2 scenarios. So yeah, we're gonna wait for the FOMC meeting to have more data to trade the market. But I know that like degens out there and still want to trade, right? But like that's one metrics I like to look at. And other indicators that are very popular on Crypto X right now, Crypto Twitter right now, is this like top 30 indicators, bull market peak indicators by CoinGlass. So I'm sure some of you have seen screenshot about like this website before. So basically these 30 indicators, they are really popular to tell whether BTC is at the top or not. And right now, if you can look at this number, 1/30, what does this mean, right? So out of 30 indicators, there's now one indicator signaling that we are at the cycle top. But like bear in mind, these indicators don't really counter the factor of diminishing return. So each of these indicators have its limitation, but we like to use this as like a reference for us to see where things or where Bitcoin is. But at the moment, there's only one indicator to tell that, oh, maybe the top is in. So yeah, the only indicator that is signaling that is the off-season index. which is quite interesting because like it doesn't feel like an altcoin season, but it is what it is. And as I mentioned, each indicator has its limitations. We are only using this as reference. And even though I do think there'll be more indicators hitting the top, but at the moment there's like only 1 out of 30. So I'm not too concerned about this. And even the alt season, it doesn't feel like an alt season. Only a selected altcoins, like a selective of altcoins, maybe pump more than Bitcoin did, like Hyperliquid. I like Hyperliquid a lot. For altcoins, my favorite one, okay, Solana, Hyperliquid, and Chainlink. That's my top 3 when it comes to altcoins. Comment down below what are your favorite altcoins, so maybe we could look into that in the next live stream. But okay, we're gonna look into some of the indicators that I personally find it really helpful to tell whether the top is in, whether getting in right now is expensive or is relatively cheap. All right, so what have I got here? This is the MVRV. Well, can you guys see? Like, I'm trying to zoom in even closer because it might be difficult on your end. So, all right. So right now the MVRV is at 2.3%. Wait, 2.3. Wait, let me zoom out all the way out so it's easier to read. It shouldn't be too. All right. So how do you read this? Think of the MVRV set score is like a thermometer for the market. It helps us to tell if BTC is running too hot, like overpriced, or too cold. That means undervalue or just right. This is powered by on-chain data, like real activity on the blockchain, not just headlines or hype. So let me break it down in plain English. What does like MV stands for and ALV and also set score? Like what the hell this is, right? So MV is just the market value, like market cap of Bitcoin. At the moment, the market cap of Bitcoin is, well, let's see, so $2.3 trillion. So that will be the MV for Bitcoin. And also, like, what is ALV? What does that stand for? Like, ALV stands for realized value. So there's so much hype in the market, and realized value means like the actual amount that people are paying for one Bitcoin. So that's why MVRV is so important. There are different indicators. So this is MVRV set score, but there's also the plain and simple MVRV ratio. So let me write down the equation. So there you go. So MVRV, that is rubbish drawing. Let me do that again. MVRV. So how you measure this is basically the classic one, MV divided by LV, in order to get the idea whether things are expensive or not. If MVLV equals to 1, that means it's neutral. If it's like larger than 1, then it means like holders are in profit, like holders of BTC are very happy. However, if it's like less than 1, that means like holders are underwater and there might be capitulation risk, something like that. So this is just the basic equation for MVLV until we have the MVLV set score that I have right now. Right now it's sitting at like around 2. So how do you read this, right? So what does set score even mean? So for the classic MVLV we have right here, like the problem is Bitcoin's price action has been so wild. So it fluctuates so much ups and downs. The raw MVLV, this equation, doesn't tell you how extreme today is, doesn't tell you how extreme the weather is. If you take into account of the set score, like it will offer more idea how much it deviates from the average price. So set score, you take the current MVRV, and then you minus the historical average data, historical average price, and then you divide that by standard deviation. Okay, there you go. That's rubbish showing, but bear with me. So once you have the set score of this, you get the number. So if the set score is below below 0, that means it's extremely undervalued. So if we zoom closer, we'll have this like, okay, back in October 2022, when MVRV set score is below 0, that means it's extremely undervalued. Is like when we see negative number, basically mean you can just ape in and buy as many Bitcoin as you can because it's undervalued and things are really cheap. Like I wish to see MVRV set score below 0 because that would be like the one of the best time. And I did accumulate during the bear market, so because I've been around. So yeah, I mean, I'm really happy that I did that thanks to the MVRV set score. So if below 0, that means it's undervalued. If like right now we're sitting at 2 point something. So between 0 to 3, that means it's fair, it's healthy, and we are in an extremely healthy market right now. Things are not like overheating. It's not like too frothy. And this also explained by the chart that I drew earlier. That's why I love doing chart analysis and also combine with on-chain analysis. So if we get above like 3, then maybe we could be a little bit concerned. But again, historically speaking, like we even touched 10. So we touched 10 back in 2017. We touched we touched 10 again back in 2013. I'm not sure that if this cycle will touch 10, because you can see like back in 2021, we did not touch 10. So there's like a diminishing return. I am very conservative when it comes to this kind of stuff. We can see this like downtrend. So I would say like 2 is still low. Maybe we could take like 3 to 4 as like the new metrics when Bitcoin gets like too euphoric, and maybe it's good as a good time to take some profit off the table. So that's how you read it. But again, whether it's the MVRV or the technical analysis, it shows that there is still so much room for the upside. We are in the middle of the slightly expensive range. It's not like too expensive, but of course it's not entirely cheap. But we're definitely not frothy. We're still a lot of room to grow. But again, like all these indicators have its limitation. There is never one perfect indicator for you to predict the future. You always have to combine with different analysis to come up with like a more comprehensive understanding. So that's why I always start with my show with some like TA, looking at the chart and stuff. All right, so that's for Bitcoin. Let me know what you guys are doing. What's your plan? How high do you think BTC will go? So yeah, type your answer in a live chat because I love talking to you guys. So that's for BTC. As for gold, it was like quite surprising because gold keeps breaking new all-time high, and it's kind of taking the attention away from Bitcoin. Like people are asking this on my Twitter because I posted I posted the tweet yesterday about like gold breaking new all-time high, and then people were like, "Oh, what's the reason and why isn't Bitcoin breaking new all-time high but gold?" So we're gonna look into that. Like when you look at this chart, like the 1-year chart, it looks like, well, it looks really decent. Liking what I see. It broke like 3,700 an ounce. So it's up more than 40% this year alone. So why gold keeps breaking its records and why isn't BTC moving? Well, first of all, gold is like risk off assets. And we know that the Fed's going to cut rate. There's only room for Fed to cut rates. And whenever there's rate cut, that means the US dollar is getting weaker because there's lower yield and people much rather to put that money into something else. And gold has always been around. It's like a risk-off asset. They treat it as a safe asset. So they'll park some of that money to gold. This is one of the factors. The other reason is that inflation. Because if you look at the CPI report, inflation is still sticky. The past data we got is actually 2.9%, close to 3%. That is not what the Fed targets. That's not what the Fed wants. So gold is acting as the hedge against inflation. That's why, okay, that's another textbook explanation why gold is breaking new all-time high. The third reason is the trade war. We still have like an ongoing trade war between US and China, though it has been delayed. I think it's gonna delay again, but let's see how it goes. And we also have like war in the Middle East. There's so much conflicts in the Middle East, yada yada yada. So like some of that fund will go to like safe haven asset like gold. And also like gold, there's like such a strong demand from all these central banks around the world. So that's the textbook explanation. As of narrative wise, like what triggered it? Like look at this. So China, what is China doing? China has been buying gold for 10 consecutive months. And if you go to the gold reserves around the world, if you go to the ranking, the top one is still the US, but China is catching up at a really fast pace. They have like 2,200 tons of gold, and it has been up 15% this year, like 15% alone this year alone. So that's a huge number. What's the motives of China? Like, why is China stacking up so much gold, right? All right, so one of the reason being that China is kind of like, he kind of at a war with US indirectly. And if you look at the BRICS nation, they are 100% for de-dollarization. So they kind of move away from the USD dominance. They find it unfair for USD to dominate the market for so long. And some of these countries, they feel like they haven't been treated fairly by the US, and especially BRICS. So BRICS stands for Brazil, Russia, India, and China. But there are a lot more other countries joining the BRICS. So China, first of all, is one of the biggest export country in the whole world. As US still the world reserve currencies, a lot of these trades still settle in USD. So what happened is that, so China collects so much USD money, and they wouldn't just put that USD to buying their local currency, renminbi, because if they buy renminbi instead, the local currency would rise up a lot. That's not what China wants to see, because if renminbi rise a lot, like the exports become very expensive, like other countries would try to go to other places, for example, Vietnam, for the goods and services, right? So China, the situation with China is that they have so much USD. in the past years, they would park some of that USD into buying US treasuries, but like because there's like a lot like rising conflicts between the US and also China might as well just park that USD into buying gold. So that's another reason why China is stacking up gold so much. Is like it's very strategic play, and gold acts like a war chest in case of sanctions. Very similar to Russia's strategy pre-Ukraine war, I would say. So yeah, I do think this gonna be like the trend of China buying more gold will continue. And China, the bigger picture is that China wants like 10 to 15% of its reserves in gold over time, even more like further challenging US dominance. Yeah, so as for Bitcoin is a little bit like in the middle, like sometimes it's being treated as risk on, sometimes it's being treated as risk off. It really depends on the narratives. And the catalyst for Bitcoin is somewhat similar. Like we know that there's going to be rate cuts from the Fed, so some of that global liquidity would, of course, flow into so-called risk-on asset like Bitcoin. So when rate cuts happen, that actually going to benefit not only gold but like stocks and Bitcoin. And also there are like different catalysts for Bitcoin, and I believe that Bitcoin is going to be like the fastest horse out of all the investment options we have, because we have a really pro-crypto government. We have Donald Trump proposing strategic Bitcoin reserve, and also institutional adoption. Like you see these inflows from ETF, like billions of dollars flow in via the BTC ETF. So that's really something that can't be ignored. So long-term wise, okay, maybe in short term, we are seeing news like this. Why is gold breaking new all-time high while Bitcoin is like almost flat on the daily? On the daily, there you go, right? But like long-term wise, if you zoom out, Bitcoin has always been the fastest horse, and fundamental wise, I prefer gold. Okay, I prefer Bitcoin. Like I like gold, but like if I can only choose one, then I'll prefer Bitcoin, because like gold, it packaged as a limited supply, as a scarce metal. But if you actually get down to it and look at the details, the supply of gold like actually grow 1.7% a year. And we still ultimately don't know how much exactly there is, like how much gold there is on Earth. While Bitcoin, everything's code, is a hard cap, we only have 21 million Bitcoins ever existed. So like both assets, like I like both assets, but if I can only choose one, it'll be Bitcoin. The second one, yeah, I will put gold as well. I like both of them. And I think they complement each other well. It's not like you can only hold one of them. If, of course, like if you have limited amount of money, then you'll want to like choose Bitcoin because it's the fastest horse. But like if your pile of money, your portfolio gets bigger and you want to diversify a little bit, like I think gold is making a lot of sense actually. All right, so that's for gold versus BTC. We also have some news from the UK. So this just came out 5 hours ago. So what's happening here? Yeah, so US and UK just announced that they're teaming up on crypto regulation with stablecoins right at the center. This is the first time ever we have seen such a coordinated move between Washington and London, and this could really reshape how Bitcoin, stablecoins, and crypto innovation like grow on both sides of the pond. So here's the context. So UK, US are reportedly preparing to deepen cooperation on digital assets, with Britain looking to copy the Trump administration's crypto-friendly stance in a bid to boost innovation. The discussions also involved representatives from crypto companies, including Coinbase, Circle, and Ripple, with executives from the Bank of America, Barclays, Citi also attending, according to the report. Yeah, so a lot of like entities are involved. Of course, like US Treasury, SEC, CFTC, and for the UK side, so there will be like UK's HM Treasury, the Bank of England, and FCA. This, however, is not like a trade deal, like because I saw some confusion on Twitter. It's not like a trade deal that they're gonna do something from today. It's not like that. It's more like an MOU, like more like an understanding that okay, these two parties is gonna have more discussion, something like that, to coordinate rules enforcement and innovation. But what kind of cooperation, right? Okay, let's look at the details. All right, so first of all, there will be shared licensing standards for exchanges and stablecoin issuers, so companies can operate seamlessly in both markets, so in both US and UK. There'll also be joint standards for reserves, audits, redemption rights, transparency. So think actual like one-to-one backing guarantees across both jurisdictions. And when it comes to innovation, like startups in the US and UK can test products under aligned rules, covering payments, tokenized assets, and DeFi. And there will also be like shared investigations into illicit finance. So, for example, if there's like ransom money, like money laundering via stablecoins. So, when there are illicit activities, like basically these two countries would share information. And there will be more formal agreement in like late 2025, and then there may be like pilot programs next year. But this could allow instant cross-border stablecoin payments, like USD stablecoins moving between the UK and US within seconds, like cutting banking fees. So that's the most important part. And there are a lot of like alignment and similarities between US and UK, I would say. Like, for example, US and I would say like specifically Donald Trump, he's not a big fan of CBDC. He's actually against CBDC. So is the UK. Like UK is not launching a CBDC yet. The digital pound is still in the design phase, with no decision expected until at least 2028. So yeah, so that is sort of like aligned with Donald Trump. And Bank of England also like stressed the privacy and financial stability concerns when it comes to CBDC. So that's again aligned with the US. While this is more about stablecoin, BTC wasn't named. There's always like an indirect benefit when it comes to Bitcoin. First of all, we have like a clear regulation, like more institutional will feel confidence hopping into the market, and also stablecoin would bring in stability, like a safer on ramps for BTC trading. And as for UK, there isn't like a dominant British pound packed stablecoin yet. In the UK, like USDT Tether is still most widely used by UK traders. And then of course there's like USDC. Some UK traders, if they are on DeFi, then they will use DAI, but that is like more niche. So because of this new route, I do expect there will be like new great British pound stablecoin projects to pop up if the cooperation makes issuing easier. So yeah, what we could take away from this news is that, again, if the world's two biggest financial hubs align on stablecoins, it actually set the tone for the global market. Like Bitcoin might not be the star of this agreement, like Bitcoin is not mentioned throughout the news. but it's likely to benefit from the stability and credibility that comes with it. So I'm liking this news. I'm liking what I saw. All right, so that's for the UK and US. Let's move on to the next piece of news I prepared. SEC and Gemini, so Gemini Earn to be specific, they have come up with a settlement. So if you guys didn't know, like, okay, after like basically 3 years, the SEC and Gemini say they have reached a settlement in principle over the Gemini Earn program, which is a product that froze over $1 billion in user assets when Genesis halted withdrawals in late 2022. So right now, let's break it down. What Earn actually was, like what Gemini Earn was, what the SEC alleged, and who's getting paid back, and what does this mean for yield products going forward? All right, so I'm not sure if you guys were around. Type in the chat, how long have you been in crypto? Because this actually happened in 2022. So what was Gemini Earn? I'll explain to you in plain English. So basically, users of Gemini, they can park their BTC, Ethereum, stablecoins in Gemini Earn within the app. And then Gemini will lend their assets to Genesis Global Capital, which is a DCG subsidiary. And users will then get between 1% to 8% APY. Gemini will, of course, take a fee in between. So the real risk actually lies with Genesis lending book. When Genesis froze withdrawals back in November 2022, like Gemini Earn users were stuck. And we are talking about like $1.1 billion of Gemini user assets fund being frozen. And there are more than 200,000 customers were affected because of this. So the SEC jumped in, and of course, like the previous administration was so hostile to crypto. So the SEC said that Gemini Earn was an unregistered securities offering. They were using something completely archaic called the Howey test. They're claiming that users invested money, like in this case is crypto, and pull in a common enterprise, which is Genesis lending, and expected profits from others. So SEC was saying it's securities, and Gemini promoted it, Genesis underwrote it. Of course, like Gemini denying all the wrongdoing, arguing it was lending gone bad due to Genesis mismanagement. So right now there's like an agreement. It's only an agreement. Like Gemini still does not admit any wrongdoing. It was like an agreement to end the SEC civil case against Gemini. So there are details about like penalties, bans, undertakings. They're still pending and still waiting for court approval. So did Gemini break any rule here? From the SEC's view, yes. Gemini was a security, well, to be specific, like Gemini Earn was a security and should have been registered with full disclosures. But from Gemini's point of view, they don't think it's a security. It was more like a lending service, and Genesis collapse caused the freeze. Yeah, so it depends how you feel. But as for the users of Gemini Earn, like where did the money go? Did the customers get paid? Okay, so because it has filed for bankruptcy, like it's under the route of bankruptcy plan and settlements, and it will always prioritize customers first. So actually by mid-2024, Gemini confirmed over 2 billion assets like returned to Gemini Earn customers. So many users recover from the lost account, though the amounts vary depending on whether claims were in USD, like stablecoins, or crypto. But why does this matter for Gemini? Right? So obviously, like retail yield products are now being treated as securities unless fully registered. US exchanges will either shut these programs down or restrict them to accredited investors. So what we learn is that if profits depend on another party's trading or lending, regulators will likely treat it like a security. Yeah, so let me know, chat, what you think about this case. Do you think it's fair for Gemini? Do you think Gemini earn is security? Yeah, this is about it. Yeah, for the SEC case, but other state and private suits are separate. This is like the standalone case. So I don't know if this is clear for Gemini or even other exchanges moving forward. But yeah, that is the case. All right, for the last piece of news, let's move on to the last segment. We're gonna talk about Tesla, though Tesla is more like an AI company. Tesla holds a lot of Bitcoin on the balance sheet, so I'm gonna talk about Tesla and in details actually. And I'm personally a big fan of TSLA. If you guys do think Tesla is a car company, like you must be living under a rock, because Tesla is turning into one of the most powerful AI and energy companies on earth. Elon Musk just reviewed Tesla's new AI5 chip and AI6 chips. And if they work as promised, they could crush Nvidia in some areas. I don't think it's going to completely eat Nvidia's lunch, but having the own in-house Tesla AI chip that will fuel Tesla's robotaxi and humanoid robot dreams, and it could connect back to Bitcoin mining. But we're going to get into that in a bit, so bear with me. What this news about, what actually happened is that, okay, there will be like this new AI5 hardware 5, and they teased out AI6. So Elon called AI5 a monster chip and AI6 a potential best AI chip ever. He actually, no, there's a tweet by Elon. So just had a great design review today with the Tesla AI5 chip design team. This is going to be an epic chip, and AI6 to follow has a shot at being the best by AI chip by far. Switching from doing 2 chip architectures to 1 means all our silicon talent is focused on making 1. So that's the tweet from Elon. Why is this so important? Because, well, Tesla's used to buy a lot of chips from Nvidia, but having the in-house chip is going to save like billions of dollars and gaining independence. Because one thing about Elon, like that seems to be his style. If he feels like the product is not perfect, it's not up to his standard, he'll just like build everything from scratch. So that's pretty cool about Elon. And yeah, so if you guys don't know much about AI, the AI sector, so we have the regular chips, right? So the regular chips is only for general purpose, like browsing internet or browsing apps. But the AI chips, they are specialized brains for learning and real-time decisions. Basically, there are 2 main jobs. First is training, so like feeding huge data sets. And then second is inference, so real-time decisions. For Tesla, maybe it's like whether it's a right decision to slam on that brake if something all of a sudden come out on the motorway, because that happened in my past Tesla drive. I was using the auto mode, and then there's like a motorcycle just like come into my lane all of a sudden, and then Tesla all of a sudden, like my car would slam the brake. And yeah, stuff like that is actually AI. And these AI chips, like they measure in trillions of operations per second, or TOPS. And Tesla's focus is mainly video and sensor data for cars and robots. As for the details, like AI5, It's designed to be like 3 to 5x more capable than AI4 and up to 40x faster in video tasks. And as for the trillions of operation seconds, so there'll be like 2,500 TOPs with a 24 gigabyte fast memory. So it's going to first deploy on Tesla's vehicles and Optimus and robots in 2026. So I'm very looking forward to it. And AI6, they're still building. So it's mostly just hype. But one thing about Elon is that, okay, he might be promising a lot. There might be delays, but Elon always delivers. So I'm not really concerned about whether he could make AI6 being like as good as he promised. Though I wouldn't be surprised to see delays. That's just his style. So for the AI6, the production will start in 2026 and maybe fully used by 2027. And it's going to be like hyper efficient, even better than the AI5, of course. So this is so groundbreaking. It's improving the efficiency a lot. It's like the best performance per watt, like more AI, less energy. And because of this, like it avoids like the 30K Nvidia chips. Like Nvidia chips are really expensive. So on that aspect, Tesla saves billions of dollars. And chips built exactly for Tesla needs. So Tesla can specialize the need for the Optimus and robots or the self-driving cars. And compared to Nvidia H100, Nvidia H100 is extremely powerful. It's used by a lot of AI entities in this world. However, it's very energy hungry. It's consumed a lot of energy. And yeah, we have like not many AI companies would do their own chips. A lot of them, they will still buy chips directly from Nvidia because like building their own chips, like spending so much money on R&D is not an easy task. So might as well just get it from Nvidia, right? Apple has its own chip. Like for example, I'm using the MacBook, and Apple has the M4 chip. However, like those chips are more customized for consumer devices. Like it's good for laptop, but for Tesla case is it makes sense to have the custom chips because like the AI5 and AI6 is actually industrial scale AI, like industrial standard, and they can use the AI5 or AI6 for self-driving cars, robotaxi, humanoid robots, energy data centers. And like when it comes to energy, like it kind of goes back to Bitcoin, right? Because like Tesla holds 11,000 BTC on the balance sheet. So that's worth more than $1 billion. Of course, there's like some interesting story back in 2021 when Tesla added BTC to the balance sheet, and all of a sudden they stopped accepting Bitcoin for Tesla payments because of some environmental issues. Like that is out of the blue because Elon is an extremely smart guy. He certainly knows where Bitcoin comes from, but the fact that I would just like blame on Bitcoin's mining, like being not environmentally green, that is, I think it's like I think it's a joke. But with this chip, and also since Tesla is huge when it comes to the energy play, they have the Megapack, which is like the warehouse-sized battery. And a Megapack could power 3,500 homes for an hour. And right now they have this like new Mega Block, which would further cut costs by 40%. And we have like a much faster installation rate as well. So it powers not just grids, but also Tesla AI data centers. And we are expecting that Tesla energy would grow 100% per year, and it could be another $1 trillion business alone. So that's really something. If we like add everything, like tie everything together, because I'm really bullish on Tesla. If you couldn't tell already, Tesla is building all these like energy, building their own chips and AI. Like if you combine everything together, like Bitcoin mining could be like even greener and even cheaper, further solving mining's energy problem. And maybe one day we could see like Tesla being very friendly to crypto again. Like they are still friendly. They still hold that Bitcoin. They sold a chunk, but like they still hold the majority of the Bitcoin. So it only takes time to see whether Elon will say, okay, we're gonna we see Bitcoin being like very green, like environmental friendly, and accept Bitcoin again. But like as for Nvidia, I think Nvidia is still going to be the king when it comes to AI chips, because Nvidia, they have like 90% market share and is worth like $3 trillion. Is one of the most valuable companies around the whole world. And Tesla currently still buys thousands of Nvidia GPUs. Again, that's like multi-billions of dollars, but with this, like Tesla reduced the dependency. Again, like Nvidia is extremely centralized. If Nvidia one day, I'm just like hypothetically saying, if Nvidia one day decide that okay, they don't want to sell the chips to an AI company, then the AI company would be under a lot of stress. So Tesla, I'm a big fan of Tesla's move because it reduced dependency, it improves like efficiency, and potentially grabs some of that market share. I don't know if other AI companies would buy chips from Tesla, but that's something really down the line. Maybe when we see AI 6, then we will talk. But at the moment, I don't think Nvidia is going away, and I don't think Tesla, just because of this move, will eat Nvidia's lunch. All right, so let me know, chat, if you guys hold any Nvidia, any Tesla, and let me look at the chat. So Bam Bam Crypto, at this rate, BTC won't top until March, April 2026. BTC top out around 250,000. Give it or take it. All right, that's extremely bullish. So I'm personally more aligned with the 4-year cycle because it proves that it's still following that 4-year cycle. Again, I would love to be wrong. Like either way, I'm set. Like another few months of bull market, I'll take it. But if we do follow the 4-year cycle, looks like we're gonna the cycle top will be in November this year, or maybe we stretch a little, maybe December, because like now that we have institutions and people like to say this cycle is different. But like until the 4-year cycle being proven that is wrong, I'm still leaning to believe that the 4-year cycle is still intact. Again, I'm happy to be wrong. I'm more than happy to be wrong. So let's see how that goes. But yeah, looks like we're running out of time. Just before you go though, make sure to follow Roxham TV. Well, this is my Twitter. If you want more regular updates from me, because like I don't always have the time to do videos like this. I'm with Roxham and I do my show Monday to Friday, 4 a.m. Eastern time to 5 a.m. Eastern time. But like other than that, like doing videos like this is very consuming. So when I have updates, I like to do like short tweets like this on my Twitter. So make sure to follow me on @GemCrypto_IO. Make sure you put _IO, and also make sure to follow Roxham, because Roxham have so many like updates, news that you wouldn't want to miss. So yeah, we are live here. Let me hit the like, and yeah, I will see you guys same time tomorrow, Monday to Friday, and thanks for watching.